Good afternoon, everyone. Welcome to the GC3 Startup Network webinar presentation on the Chemical Angel Network. We will begin shortly. Good afternoon, everyone. I hope you can hear me okay. Welcome to the GC3 Startup webinar on the Chemical Angel Network. My name is Julie Manley. I'm the coordinator of the GC3 Startup Network and the moderator of today's webinar. The Green Chemistry and Commerce Council is a cross-sector business-to-business network of companies and organizations working collaboratively to accelerate green chemistry across sectors and supply chains. GC3 members are champions and innovators, as you can see from our more than 120 members across the value chain. This webinar was organized as part of a new initiative within the GC3. It's called the GC3 Green and Bio-Based Chemistry Startup Network. The goal of our network in the goal of our work in the Startup Network is to, one, support green and bio-based chemistry startups, and also to introduce the large strategics to the new chemical technologies, as well as partnerships and investment opportunities. We now have over 25 companies that are members of the GC3 Startup Network, and we are signing on more. These startups are able to tap into our network of large strategics through our mentoring program, or as we call it, our Strategic Connections program, and also participate in our technology showcases, where we bring together startups to present to and network with our large corporate members. And these startups can also participate in workshops on key issues such as leveraging partnerships to accelerate innovation. Our next technology showcase will be at the GC3 Roundtable on March 8th, which will be hosted by Eastman Chemical Company in Kingsport, Tennessee. New this year and just launched, the GC3 had just launched just weeks ago a global competition to identify 10 startups with promising technologies that match the specific green chemistry and material needs of our larger GC3 members. The specific detail on the technology needs can be found on our website, and meeting these categories is not an absolute requirement, but it is encouraged. Registration for the GC3 Innovators Roundtable, May 8th through 10th, is now open. So as we transition to the presentation today, I'd like to quickly go over some logistics. Due to the number of participants in the webinar, all lines will be muted. If you have a question or comment, please type it into the questions box located in the control panel. You can type in a question at any time during the webinar. Questions will be answered at the end of Mark's presentation. The GC3 Startup Network is very pleased to be able to bring to you a webinar on the Chemical Angel Network. I'd like to introduce Mark Vreeke, co-founder of the Chemical Angel Network. Prior to the network, Mark served as Vice President of R&D for Rational Biotechnology, a Rational Systems spinoff, as well as Senior Vice President of R&D at Pepex Biomedical, and he also held research positions at TheraSense. Thank you, Mark, for offering to present today, and I'll hand it over to you.
Good morning. Thank you very much for the introduction. Today I'm going to talk a little bit about angel investing, and in particular the Chemical Angel Network. The kind of first question may be, why is Chemical Angels presenting at this? Well, green chemistry really is a disruptive factor within the broader chemical industry. And where there's disruption, there's opportunity for investment. There's opportunities for new companies to grow. And we hope as Chemical Angels to be able to capitalize on some of that change. So outline of the talk here, I'm going to give an introduction to the network and angel investing. A little bit of a discussion about the Chemical Angel members. Then go into the entrepreneurs and why an entrepreneur would want to engage with the Chemical Angels. A little bit about our process, how we go about vetting companies and doing due diligence. And then a little bit of a 5-year update. Chemical Angels, it's in its 5th year now. We just had our 5-year anniversary 3-4 months ago. So what is the mission of the Chemical Angels, or what is Chemical Angel? Well, the mission of the Chemical Angels is to really stimulate the chemical economy. We're looking to grow early stage companies through our capital investments in them and our mentorship of the broader network. Companies, or the chemical economy, we kind of refer to as the 3 M's, materials, measurement, and manufacturing. I'll go into a little bit more detail on what the 3 M's are, but that's kind of the space at which we invest. And then, like any angel network, there's really 3 things that are required to build it. And those are an active investor base, basically the angel members themselves who are willing to use their own funds to invest in these early stage companies. Entrepreneurs, basically the companies that are out there. Our goal is to become really the smart capital of choice for those entrepreneurs, where chemistry-based startup forms, and one of the first groups they go to is, hey, Chemical Angels, they can help me start my company, vet it, and help me move forward. And then the third thing is a framework whereby we can do our due diligence, our vetting of the company. So a little bit about where Chemical Angels came from. Myself and the other co-founder of Chemical Angels, Sid White, were attending an American Chemical Society council meeting. And during the meeting, they described a lot of entrepreneurial training that the American Chemical Society was providing. I mean, this was very good training. It was Kaufman training, and Kaufman is kind of the gold standard for early stage, seed stage companies, and it was very impressive. I mean, it was really gonna help get these entrepreneurs going. But Sid and I both raised the question of, well, is there going to be any funding mechanism for these companies? And the American Chemical Society rightly said, hey, that's outside of our mandate, and we're not going to be investing in them. We'll help train them, we'll provide resources to them, but there isn't going to be an investment. So I was working for a VC group at the time, and Sid White was active in his local angel network. Him and I both said, well, how about we start an angel network where we can provide some of the financial support to these companies? And thus, Chemical Angels was formed. So angel investing, what actually is it and where does it kind of fit in the whole ecosystem? If you look at an early stage company, there's a variety of funding gates or funding stages at which a lot of these things go through. You know, there's kind of the seed, the startup money, the first money into the company. And this tends to be, you know, family, person doing the initial start with his own credit cards or her credit cards, you know, getting money from relatives. It's not necessarily all that formal. Some early stage angels will get in there at the startup level, but very rarely at the seed. Then we kind of move into an early stage. This is after the company's formed. You know, maybe they have a little bit of IP now, intellectual property, some patents filed, maybe a benchtop reactor, and then they go and try to get some early stage funding. This is where really the angels play. A lot of companies go out to local angel groups. Chemical Angels is a little different. It's a national angel network, so we can actually invest all over. But that's kind of where that early stage is. And a lot of that money is also invested alongside grant money. So you'll hear a lot about the SBIR program. It's run by the federal government. You know, that's non-dilutive funding. The angel investment, a lot of times, will be invested alongside that non-dilutive funding. A little bit further down the spectrum, you start getting into growth funding. This is really where the VCs start playing, the corporates start playing, and the company has kind of progressed from demo, proof of concept, to some early sales. And they're actually producing some product, getting that product out to their customers. And maybe this is to, you know, go from a regional launch, let's say they launched in the Northeast, to a national launch, or to bring their product overseas. And then finally, there's an exit. This is what investors ultimately want to get to. You know, they put their money in, they put it in as an investment, but at some point they would like to get that money back out and have a reasonable return on that money. Okay, I mentioned this before. We do have a sector focus. It's a chemistry focus that definitely catches the GC3 green chemistry area, but we're looking for things in the materials, measurement, and manufacturing space. So on the material side, you know, we'll look at anything from fuel cell membranes to solar cells to new plastic materials, maybe a biosourced polymer. Nanomaterials has been kind of a big one for us. We've looked at different silicons and metal oxide frameworks, again, for battery applications. On the measurement side, we'll do anything from an in vitro diagnostic, so getting into a little bit the medical diagnostic space, to more of the standard chemical sensors, doing things for like explosive detection, drugs of abuse, alcohol sensors, and then, you know, just more standard analytical equipment, you know, like a small scale NMR or something like that. And then on the manufacturing side, here we will do anything from, you know, bioreactors, maybe going from using non-food sourced grains in the bioreactors to more standard Fischer-Tropsch type catalysts, you know, things for converting CO2 to methane, maybe using an optical process. Okay, where is the CAN footprint today? Again, I mentioned this already. You know, Chemical Angels is a national angel network, Most angel networks are regional or even based in just a city. Some examples, Tech Coast Angels is kind of along the coast here in California. Desert Angels is really just in the Phoenix area. Chemical Angels decided to have a national footprint for investors, primarily because of the sector focus. If we were regional, we just would not get sufficient deal flow to justify this type of network. Okay, a couple of things on what Chemical Angels is not, and I think this slide really helps say what the angel network is. Chemical Angels, it's not a fund. We're not a broker. The network does not make investments, and it doesn't act as an agent in any way. We don't take a share of the returns from any of the member investments, and we're not registered in any way with the SEC. What we are is a platform and group that can share due diligence among the members, collaborate on that due diligence, provide some mentoring for the companies. However, everybody makes their own decisions. Everybody writes their own check to the company if they decide to invest. Okay, a little bit about the members and why folks would actually want to become an angel investor. Well, reason to participate with Chemical Angels, starting maybe from the bottom. First, membership is free. The reason that membership is free is really from where the network started. It started really out of that ACS meeting where there was a need to provide funding to the companies that had received the training. And so we wanted to pull in a lot of chemists, chemical engineers, who maybe this was their first time to do an angel investment. And they were doing it to provide a little bit of social capital, so to speak. Yes, we're interested in return on investment, but we'd like that return to come from a business sector where we made our money and we made a good living. Now going up to the top, the investment size can be actually fairly modest. We do a pooled investment for some that require a minimum. A lot of these companies will require a minimum, say $50,000 or so to invest. A lot of the investors, don't want to invest that amount of money. And so what we do is we do a pooled agreement. It's just a side agreement where we can actually invest with as little as like $5K into any one company. The network itself, it's a way for members to share the due diligence and to get the benefit of what the other people are thinking and their prior experience. So it's a little bit of, wisdom of the crowds where, we can bring together, a dozen members to take a look at a company and hopefully come up with a better investment decision. The other benefits, you can actually review these deals anonymously. You don't have to have your name displayed to the companies. And then finally, you also get free membership in the Angel Capital Association. That's the association that covers angel investing within the US. And they have a lot of nice training materials, 2 formal meetings a year. So it's a very useful organization to participate in if you are an angel investor. Okay, a couple of statistics on angel investing. Well, first off, angels tend to have fairly good returns, approximately 20 to 30% ROI. That's from the Angel Research Association. It's the statistics they've pulled. Couple of caveats on that. The angels have to, or this is for angels who have done 7 or more deals. So angels who only invest in 1 or 2 companies typically do not do very well. The best way of getting a positive return is to essentially place a lot of bets. And you're really going after, a couple of companies that really do well. The majority of your investments actually are not going to produce a positive return. In fact, personally, whenever I make an angel investment on my own balance sheet, I write that investment down to 0. Okay, the next thing is when angels invest together, their returns are actually higher. Median check size is $25K for angel investors. For chemical angels, the median check size is around $10K. And the last item up there, again, we already discussed, number of investments. The more you do, the better your odds of a positive return. What does a typical angel investor look like in the US? This is actually kind of an interesting slide. Age, 57, most of these people are approaching retirement age. Education level, most of them are fairly well educated, master's being kind of the median degree. Number of investments and number of years in investing, both around 10. And then probably the most telling thing is years as an entrepreneur. Most angel investors actually started as an entrepreneur. Their company was successful, and that has allowed them to do angel investing. That was the case for myself. Okay, to apply the chemical angels, you can hit our website. Couple of requirements here. One, you have to be an accredited investor per the SEC. Accredited investors are folks with a net worth over $1 million, which the vast majority of the folks who have worked in the chemical industry and retired out of it have that net worth. And for the folks who are earlier in their career, the requirement is a $200,000 a year salary. Okay, entrepreneurs. So why would an entrepreneur want to participate in the Chemical Angel Network or apply to the Chemical Angel Network? Well, first off, we have a framework that we can efficiently vet your company. So it's not going to require a lot of time for the entrepreneur to apply to the network. The majority of our meetings are just like this, over WebEx or GoToWebinar. So the entrepreneur does not have to pack up their stuff, get on a plane, and go to visit the Angel Network. You can actually do it from your own desk. The other benefit really is that Chemical Angels syndicates most of our deals. We are not the only folks who are doing the investment, and through syndication, we open up the number of potential investors to your company. And then the last thing is, again, there's no fees charged to the entrepreneur or the businesses to apply. Excuse me. Kind of going into our due diligence and what we look for in companies, there's really three main elements. It's the management team. It's the management team is the entrepreneur. It's the people that are surrounding the entrepreneur, their support, their scientific advisory committee, their board, where their technology is coming from. It's basically the team. And for early stage investing, which is what we do, you're making a big bet on the entrepreneur, because a lot of times what that initial business plan is will not be what ultimately forms the basis of the company or what the company makes revenue on. A lot of times that company will have to pivot, make changes, and you want a management team who can effectively pivot, who is open to change and to moving the company in the direction it needs to move if that has to happen. Excuse me. The other two main elements, business opportunity. Is there a need in the market that the company is fulfilling? Is that need sufficiently large that you can justify making a business around it? a $1 million a year need is just not going to justify an angel investment. We want these companies to ultimately become 50, 100 million, billion-dollar companies, not a $1 million a year lifestyle type of company. The third element is context. How does the company fit within the broader competitive landscape? Whatever your technology is, there is going to be some competition. And how do you address that competition? How do you beat that competition? What is the space in which you're playing? And then there's some overlap. The management team and context is where you get your product. Business opportunity and context, it's really kind of the resilience part of the company. And then timing. The business opportunity, you have to have the management team know that it's the right time for this product. One last thing that Chemical Angels does look for, which is a little bit unique, we look for technologies and companies where one or more of our members can actually provide something more than financial capital. Because if we're just providing dollars, the benefit is not as great as we'd like. And we'd like to really be able to leverage the network's experience. Okay, typical deals for Chemical Angels. What do we invest in? Again, compelling business model. We want to see a problem that is readily apparent, that has a big market that can be monetized. The company needs to have a headquarters near one of our members. One of our members needs to be able to go and basically knock on the door, meet with the entrepreneur, kick the tires, so to speak. We need a match to an existing member's experience. Again, we want to be able to provide more than just financial capital. Investment size, typically, about 100K is where we would come in, and that's not going to be the only money in the deal. Again, we syndicate these, so our investments have actually been anywhere from 20K to 400K. But in the syndication deals, we've gone in deals that we're actually raising up to $6 million. Okay, so for entrepreneurs, if you have a business that's ready to go, that the company has formed and you're looking for capital, again, you can hit the website and apply to the network. Okay, the third leg is the process. Now, how do we actually go about working on the vetting of these companies? Excuse me. The basis of our process is really a weekly call. We have one call a week that focuses on a different aspect of the due diligence process. And these 4 meetings are basically an office hours, where all the companies that apply to the network are invited to give a 5-minute elevator pitch. And we use that to basically get a first look at the company. Then we have a selection meeting where we select 2 companies typically to formally present to the network. So depending on deal flow, it'll be anywhere between 2 and 4 companies that are selected. Then we have formal presentations. These are longer presentations. Companies give about a 20-minute talk, and then there's follow-up Q&A. These things are recorded, and it allows the members to look at them in their leisure. And then the 4th meeting each month is a due diligence call, and that's where we really get into the nitty-gritty about the deal, what we think about this potential company, and whether or not we're really going to go forward with an investment. And then there's a variety of ad hoc discussions that are targeted around individual investments. So we do have kind of an investment workflow. For the entrepreneurs on the call, you want to stay on the green track, and basically, we get a new application coming into our website. We have that screening, basically it's the office hours and screening meeting where we select folks for formal presentations. They get into the queue for a formal presentation. They do that formal presentation. Hopefully at the end of that, everybody says, yes, we're interested in going into due diligence. That's the basically formal review of the company. And then if that is successful, there's an investment, and we go into monitoring where we get updates on the company. And hopefully with those updates, there's the opportunity for us to provide additional support to the company. Where you don't want to go, of course, is the rejected red box, which can happen at any point. And then there's also kind of a hold pattern where you've been screened. We are a little bit different than a lot of angel networks. We won't necessarily reject you if there's a hint of something there. We'll keep you kind of in a hold status and just keep requesting updates. And at some point, if there's an update that really just turns the scenario for us, then we would invite you in for a formal presentation. A little bit on the deal flow by the numbers. New status, we're receiving about 150 to 200 companies a year applying to the network. We screen about 100 to 125 companies. Those are the elevator presentations. Presenting, we actually have 24 to 30 companies present now. Some months we actually have 2 presentation cycles. And then we go into due diligence with 10 to 15 companies a year. And in 2017, we had a total of 6 investments. We try to keep it at an investment a quarter. Last year, we just had some really nice deal flow. Okay, a couple of other process details. We use Gust as the platform for vetting deals. That's beneficial both for the investor and the entrepreneur. For the entrepreneur, they can put one profile into Gust, and Gust is used by about 25% of the angel networks in the US. So they can make one application and send it to multiple angel networks. So again, we're trying to make this efficient for both the entrepreneur and investor. We use WebEx for virtual meetings. And then one of the other kind of benefits is that the American Chemical Society and Materials Research Society see the need for angel investing to support some of these early stage companies. So they provide us a forum at their national meetings to actually have a face-to-face presentation. And that's very beneficial because a lot of angel investing is a relationship building process. So without those face-to-face meetings, it would be very difficult to build those relationships strictly over a web platform. Okay, last item up is a 5-year update, kind of where we are. Maybe just a little bit by the numbers here. Members, we have over 40 members. I think we're actually up to 50 now. However, there's a little caveat here. Really active angels in the group. It's more like a dozen who participate on a lot of the calls. And the reason that there's a lot of passive members is we don't charge to join. Most angel networks will charge you between $2,000 and $3,000 a year. Ours is free to join, and again, we're doing that because we want to stimulate this chemical sector. Deals submitted, we got to update that. We're up over 400 or 500 deals now. Investments, we've had 17 to date. The first year was relatively slow, and then we had 1 year in the middle where valuations just got a little bit high, and we just couldn't justify making some investments at the valuations the entrepreneurs were requesting. Sponsors, since we don't charge the entrepreneurs or the angels, we do actually have a couple of sponsors that help take care of some of the overhead, but still most of the overhead is myself and Sid White. And then partners, folks like GC3 who invite us to talk, and hopefully we can help support some of their companies. Basically, it's a sharing relationship where we both support each other's organizations. And then we have a LinkedIn group with almost 2,000 members now. Feel free to join the group, Chemical Angel Network. It's a LinkedIn group, and that's where we share a lot of just general investment information. Some of the companies post jobs there. We like to help them identify candidates to fill roles in the company. And then, some folks just post some general questions. One company was looking for a template for standard operating procedures. Well, here's where the rubber meets the road, investment returns. On the left, you see all of the companies we've invested in. The companies in green, those are our stars, so to speak. They're companies that we've invested in, and they've had a subsequent valuation. Say they raised a Series A round or a Series B round that was at a higher value than our investment. So they're positive. We've had 2 companies go out of business, Pediatric Bio and Qteros. Those were some of the first investments in Chemical Angels. And then all of the companies in black are companies that haven't had a subsequent valuation. So what we ended up doing is calculating a return on investment. So our realized return, basically where we've gotten cash out, is actually negative because all we have is two exits that were negative. However, that same calculation, if we use the Series A or the conversion of the debt, we actually have an unrealized ROI of about 25%, which is right in line with other angel networks. In fact, we should be getting our first exit pending government approval for the sale of one of these companies. The other thing is, for the GC3 folks, you may see like Kenora there. I think they're participating in GC3. That was also one of our early investments. Partners and sponsors. Again, sponsors, couple of companies on the left there, they've actually provided money to the company or to Chemical Angels to host activities, the face-to-face meetings, that sort of thing. And then we have, partners on the right where we're just sharing within each other's networks. Okay, well, what's the next step for Chemical Angels? Well, first, it's to grow that membership base. We're looking for active angel investors who want to put a small amount of their net worth into angel investing, and particularly within the chemical space. After that, it's to provide an investment vehicle for the passive participants. Again, we have a lot of members who are interested in the space. They just don't have the time to do this. And so we're trying to create a vehicle whereby that inactive member can still participate in these investments. Third, really increasing the participation with other organizations. And again, GC3, thank you very much for inviting me to talk. And it's exactly what we want to do. We want to be able to partner with these groups that are also promoting entrepreneurship, so that this is an ecosystem that we're building. And the last thing is, we do have a couple of internship opportunities. We have young man, young woman who are recent graduates who are interested in entrepreneurship, and they're interning with Chemical Angels now. And then finally, just kind of a tagline here: CAN success really depends on active participation of the members and the entrepreneurs. It's not a nonprofit, but it does not make any money. It's really dependent on people putting in some time and rolling up their sleeves to vet companies and to do the hard lift. With that, thank you very much for the opportunity to talk today. And I'm happy to take any questions, discuss some of the companies that we've invested in, maybe why we've invested in them. So Julie, let you go from here.
Great. Thank you, Mark. Definitely Chemical Angel Network is a very interesting resource, and we certainly hope you grow the investor base and entrepreneurs. So with that, I think we have some questions coming in. As a reminder, please enter any questions or comments in the questions box located in the control panel, and I'll manage through those and get through as many as we can. So with that, first question I see is, you mentioned the geographical location of the investor base. Are you at all interested in startups outside the US?
Yes. We have one investment in Spain, and we have an investor in Norway and Great Britain. So we are looking for deals outside the US. I will say this, it's a little bit more challenging to do those deals. I think doing a deal in South America, we wouldn't do. We don't have any members there. Doing a deal in the Far East, we wouldn't do. We don't have any members there. Canada, we've seen several companies from there. We have yet to do a deal in Canada, which is actually a little surprising. I would have figured by now we would have done at least one Canadian deal.
All right, we actually have a few questions along those lines, actually. Along the lines of geographical location, Canada is an example, or even distance between your investor and the company. Is there any kind of rule of thumb with respect to geographical location? Do you think did the Canadian deals, as an example that you had presented prior, not work out unrelated to the geographical distance?
For the Canadian deals we've seen, we just haven't closed the deal. I think it was just really they didn't hit every one of our requirements for the due diligence. I'm thinking of one that was in the water space that we just felt the company wasn't going to be able to reach their target market. So
okay.
That's the main reason we didn't do that one. Rule of thumb for our distance, we kind of say an easy hour drive for the angel member. The other thing that does cover that requirement is syndication. So we may not have an angel, say, in Phoenix, but we're willing to work with Desert Angels. So if Desert Angels does kind of the initial lift on the due diligence, then we'd participate in a deal there.
Great.
So if we can work with a local angel network, that's more than sufficient.
All right. With respect to understanding this geographical nature of the business, and extending that question a little further, is the entrepreneur at all made aware of those investors that are considering investing, or is this a blinded process?
It's a little bit of a mix. There is going to be one angel that kind of takes the lead on each of these investments, and the rest of the chemical angels typically will funnel the questions, the comments, the concerns through that one member. Depending on the deal, it may be a couple of members that are interacting directly with the company. The rest of the angels may or may not be known to the company. But ultimately, when they write their check, since everybody writes a check independently, the entrepreneur, the company will know who those people are, because they're going to have to put them on the cap table and send them a stock certificate or promissory notes. So they will know that.
All right, I have some questions regarding timing and timeline. First off, is there there's a couple questions here. First off, I'll ask, what is the typical timeline from the initial contact, or I guess you could call it, as you said, the pitch that might be made at that weekly call, to if funding is successful? What does that timeline typically look like?
Yeah, the fastest we can move is about 2 months, basically from that first elevator pitch to making an investment. And that would be dependent on having a deal and all the terms already negotiated and set, and we're just following on with those terms. More typically, we're looking at about three months, a 3-month timeline. If it starts getting longer than that, it becomes less likely that there's going to be an investment. But one of the interesting things about our network, I think one of the benefits is that we don't necessarily say no to a company if we think there's a possibility there, and we keep requesting updates from the company, and hopefully they're providing that within GUST, and when there is a change, we can then go forward with an investment. And I'll give you an example. Advano. We were introduced to them, I don't know, 4 years ago, and we like the concept. This is for nanoparticle silica, a very low-cost way of making it. We like the company. The entrepreneur was going a very capital minimalistic approach to getting some product that customers could trial. And for about a $250,000 total investment, we felt that the market could be proven for his product. Well, we were in on the deal. The deal fell apart at the last minute for, won't get into the details, but the deal fell apart. The entrepreneur then went and tried to do a more capital intensive raise where he was looking for a couple of $1 million. And, we gave him the feedback saying, look, we'd really like to see a capital minimal approach to this. We think that's the best route to go forward. He spent about another year trying that high capital route. And that was not successful, came back to a low capital route again. And about 2 years after the first time we talked to him, we made the investment. So sometimes it's a long process, but with some of these really early stage companies, the company may not be ready. There may be some things that they need to do before they really are set for an investment.
It's as if you read this question in front of me. What is the best timing for an entrepreneur to apply for funding? And is there, say, a rule of thumb or certain milestones that your network typically looks for at a minimum?
Yeah, at a minimum, the company has to be formed. We don't invest in ideas. We don't invest in just a patent application that somebody wants to form a company around. The company has to be formed. We prefer the intellectual property, if it's coming out of a university, to have the license terms completed with the university, not an option to get the license. Once it becomes challenging and fairly long, drawn out process sometimes to negotiate the ultimate license with the university. So get the IP and everything lined up ahead of time. We'd like to see a prototype. We also like to see some level of market validation. Have you talked to your customers? Have you lined up your customers? A fairly extensive survey of the competition out there. So those are some of the things we like to see.
All right, and some questions have come in regarding the investment criteria, or if you're unable to necessarily provide much detail, is there a way that you could provide detail by taking a look at an example, perhaps one of your greener chemistry examples?
I'm sorry, I didn't quite follow.
Do you have any set investment criteria per se, and would you might be able to utilize an example such as one of the companies you've invested in that might be a greener chemistry material or technology, and utilize that as an example? Sure.
Maybe we'll take Kenora for kind of as an example. Let's see. Kenora, they are doing a recyclable thermoset plastic. So basically, most thermosets, you cure them, and you have a very robust plastic polymer. However, it's very difficult to recycle because of all of the cross links in the polymers. And you unlike the thermoplastics, you can't basically reflow it and form it into your next bottle or your next tool. The guys at Kenora basically have a solvent system where they can create their thermoset plastic, put it into a composite, and then dissolve it in their solvent system, and basically bring it back to the monomers, which then they can repolymerize again. So they have essentially a recyclable thermoset, which gives you the hard properties of that thermoset without the environmental problems of not being able to recycle it. So we liked the space they were in. This is a multi-billion-dollar industry, so there's a big potential market there. They're solving a real problem. The existing products are basically landfilled. And they had a technology base that was already established. They had some small-scale reactors for doing this. They had some prototype samples. Their IP was filed, and they were generating additional IP. The people that they were working with were pretty good on the investor side. They had Samsung Ventures leading the deal. So the people around the deal were pretty good. The entrepreneur himself was a very dynamic speaker. He seemed to have great leadership qualities. And so, again, early stage, you're betting on the person and the team, and that seemed like a reasonable bet. Technology seemed to be there, and there seemed to be a great market. So that's why we made the investment.
All right, thank you. Another question, a little bit more on the investor side potentially, and that is, what has been your experience, if any, with incubators and accelerators, and what's your been experience working with them as partners for deal flow?
Well, the local, I'm based in Southern California, and the closest school to me is University of California, Irvine. And I attend a lot of the activities over there, and have even participated in some of the student programs where they're, doing business plan competitions and the like. It's an excellent source of deal flow. Most of our deal flow really comes from the angel network itself, people going out and talking to groups, meetings at their local incubators and the like. So that's where we find our deal flow.
All right, I think we have time for one more question perhaps, and that is, are there any trends that you have seen in technology space? Is there any areas that you may have seen disproportionate amount of success as in one area rather than another?
Well, I think most folks would agree that most of the investment these days are really going into apps and into IT. You basically can have 3 guys or girls in a closet and put together the next web app and go and raise money around. Chemical Angels is not doing that type of investment. We don't do electrons. We do atoms and molecules. Trends in the space. I think with respect to green chemistry, there really has been a transition. There was a huge wave, 10 years ago, pushing green chemistry, where folks even were feeling they could get a premium for green. And I think that the market bared out that nobody was going to pay a premium for green, or it was a very niche market where people would pay a premium for green. If it's cost parity, people will take the green solution. If it performs equivalently and the cost is on parity, people will go green. Otherwise, it's going to be a very difficult proposition. And I think companies that are in this space have really started addressing that and are coming in with solutions that are cost parity or better.
One final question before we wrap up, and that is, if people are interested in submitting an application or being considered for funding or even considering investing, what is the best way to contact and make that initial contact with you?
The best way is to actually apply on the at chemicalangels.com. You're more than welcome to contact me directly, but as I tell most people, if you contact me directly, you'll only be talking to me. And my wallet is much more limited than the broader network. So if you apply to the network, you'll be able to get in front of all of the investors in the network, and you'll get much more exposure. So I would start with the entrepreneur link at chemicalangels.com.
All right. Well, thank you very, very much, Mark. I appreciate it. As we wrap up, I just want to remind everyone that there is another series of webinars coming up hosted by the GC3 Startup Network, all on topic of patents and various aspects therein. They are presented by legal experts from the firm of Finnegan, Henderson, Faribault, Garrett, and Dunner, and you can register for each of those webinars separately. Again, quick reminder, we do have the GC3 Technology Showcase competition. Applications are due February 16th. And registration is now open for the GC3 Innovators Roundtable, May 8th through 10th. With that, I'd like to thank Mark again for presenting today and all of you for your participation. Thanks, everyone. Have a great day.